Live, so here we go. And I'll get you the link here in just a second.
Okay. Well, we'll give it a little time to get some people in.
That's not the right link.
Are you trying to post it on Twitter or?
No, I'm going to send it to you in DM. So you can pull that up and then get the chat going.
Oh, I got it. Okay. So let me go copy link. Now yesterday, I really, because I was so deep in it, I barely even looked at the chat. And that is muted.
Yeah, it's muted. So
we're good to go. Just a matter of waiting for a few people to show up.
Yep. So great. We got 9 people watching. Good morning, everyone.
Hey, good morning, guys. Try and get 10, 15, 20. We'll start there. So we'll give them a couple of minutes. Oh, I guess we don't need my Twitter feed up there. Let's get this over here because that's what we'll start with.
I've got the disclaimer up right now. So
okay. Oh, so they couldn't see it. Okay, good. Mm-hmm. All right. So who's up first? Grant F. Grant F has gotten. I like Grant F.
Another hottest balls day in Austin, Texas. It's coming. That's for sure.
You know, the good news though, man. Really, if you look at the calendar, we only have another month.
It's been a pretty mild.
Compared to previous summers, it really has not been that bad.
Yeah.
All right, there's 19. Okay, one more. Oh, there we go. All right, 20.
Yeah, I've got.
That's a good start.
Football starting soon, and
yeah, I know
it's not too bad.
Yeah, I know it. Football and school.
Baylor football.
So actually, I guess from now it's just whenever we take off the disclaimer, right?
Yep. So good morning. We've got Traditional Tuesday today, so it's going to be all traditionals. So if you're a non-member of TDU, then you can do a request. Just do the donation and then put in the equities or commodities or Forex, whatever you want. And we'll review it. But yeah, today is going to be traditionals only. So
yeah, anything but crypto.
And take it away.
All right, guys. Good morning. All right, so I will just start here with just a little reminder of this format. Because this is a format. I don't want to dare. A couple of years we've been doing this, MonteCrypto. I think we've been doing it this way, where what we're trying to do is we poll the members for assets that they're interested in. We ask that they post a chart because it doesn't do any good. And when we started, we used to do it that way. I would just say, okay, tell me the assets you're interested in. And then I would just kind of put a count on it and talk it through. But we just eventually realized that it was a much better teaching tool if we required that members posted their content or their chart or their analysis. So we could get a read on how they were developing as technicians. Many people come to us with some clue, as to what we're about. And, they're interested in Elliott Wave and some of the things that we do that are, it's kind of combined different components. Many of you will hear me talk about combining pattern price time, pattern price geometry, looking for those confluence points. And I just remind you, because so many people think of us as purely an Elliott Wave learning environment. While that's certainly a big part of what we're teaching, if you were to work through the belt system, you'd find it probably it's about 60-40. 60% of it would be Elliott Wave focused, and the rest of it would be understanding the Fibonacci relationships, how the algorithms work, geometry, how to combine them. And that's really what you'll see. And I like to think of these not only as an opportunity to what a member has posted again, so we get a feel for their progression. But as I was saying yesterday, it's a great scan for setups because you've got, we got hundreds of members looking at the market through this same lens of looking for that confluence between a pattern, which may or may not be an Elliott Wave based pattern, but some sort of a pattern tied to a price or a level. In this case, as we're looking here, a Fibonacci level, and then is there geometry that we can wrap around it, and we can get all three of those in alignment. Then it just becomes an easy decision to take the trade. So this is a great first example here, coming from Grant F, who's been a member now for quite some time. Is very, very solid skills, and he's really developed. And he came to us originally, I think he had a strong emphasis on harmonics. He was very skilled working with harmonics, and has really broadened out now to where this may be the first post Must not be a harmonic in here, because typically he'll give us a harmonic in conjunction with an Elliott wave count, which is just one more confluence point. If you can find a harmonic on top of an Elliott count, on top of a fib retracement with geometry, it's all the better. So this one, this is Intel. He's giving us a 2 hour. Now I don't have, we don't really need it here. So this topping up here, you'll see we're at the 1618, 175 window, right? So we're coming into our 3 here, 3 legs down into the 4. So we get a flat here. Oh shit, do we have a flat? No, that looks like 5. So pardon me, we get a zigzag here. And then we run right into this impulse, 3 down into the golden zone. So what do we have here, right? Golden corner pocket. That's our signature trade. So from that corner, we've got 3 targets. So this is, this job makes my job easy. There's really nothing to review here with regards to the way he's counted this section here. And you could just look at it. You could simplify and say, well, okay, we've got essentially a well-established support 1, 2, 3, 4 times. Finally, we get a reaction coming off of it here. Now I don't think, can I draw on this? Yeah, I haven't made a copy of it yet, but you could look at it this way and say, okay, we're in this nice consolidation range, and the potential here is now for us to break out of it. So what he's forecasting here off of the golden zone is, okay, completed impulse. I've got 3 down. So I have pattern, I have a price level per the golden zone, and then I have geometry, which is always in lieu of a time component where you might be forecasting out in time. Geometry is always doing that. Geometry being a leading indicator, which I was kind of harping on yesterday. Because, if you're sitting right here without the geometry, you don't, unless you're doing some sort of time analysis, you don't really have an idea of, well, what kind of time frame might I be looking at? So the other thing that we know, right, I've harped on this enough times, that as long as we hold this pivot here, we have an 80% probability of making the median line. Now, when I say that, let's see, will this work on a, yeah, well, now we could hit the median line here. We could hit the median line here. All right, it's particular angle. The odds play is just relative to the fact that, again, I always emphasize this. Hang on a second. Somebody calling me. As long as we work from this pivot, we maintain our 80% probability. Now, I say that in the same breath, you have to recognize that trading principle number 4 is a failure to make the median line is a big tell, because if we fail to get there off of this push here, particularly with this setup, if we fail to get there, it sets up a move equal to or greater than the swing that failed to get there, right? So it would be giving you that additional kind of a heads up that perhaps the trend isn't as strong as you had initially anticipated. Now, you certainly could do that, right? So if this is at a larger degree here, this is a 2 hour. If we're going to go 1, 2 into 3, right? Of course, the anticipation would be that you'd have a subdivision of an impulse to qualify it as a 3. So right here is a bit of a judgment call. So this might be, if you were a buyer here, and you didn't make the median line here, this would be very much a question of, do I have pattern here to support the idea that we're not done here yet? So if I was going to get the 3 here, if I was anticipating from this that I'm going to get my 3rd up here, and here's your target, right? Here's the -1, right? Because I think most of you recognize this. If we come from a golden zone here, the -100 here will be the equivalent of the 1618. Right, so 618 to 1618. It's just simple math. So if we do it that way, then if we go 1, 2 here, well, if this is a retracement here and we hold right here, you can kind of just see it, right? It's kind of laying out for you right there. Oh, there's some prior structure here. If we're going to retrace there, well, then I wouldn't be making any assumptions about this. Oh, I failed to make the median line, so now I'm going lower. This would be an opportunity to add to that, as you'd have the opportunity because of that anticipation. So this is a particularly good example because you're now teed up and looking for the 1, 2. Now, right, might be here, might be smaller, right? We're adapting to what the market is doing as it reveals itself. But the 1, 2 here, so if I was a buyer here and we got just here, I wouldn't be running to grab profit here. I'd be giving this a little room to breathe because you're not to the point where you're threatening this pivot. What you've got is the opportunity to add if you start to like it all the more. Now, you could add by buying additional the underlying asset here being Intel stock. You could add with options here. You could, I mean, there's, this isn't really an option training course, but there's a lot of flexibility with how you might approach that add via the options market, but not to digress into that completely. But it would be just a great opportunity. You almost are looking for that. If I can go 1, 2, well, now I'm adding in line with the trend that, excuse me, that I'm anticipating. So I'm looking for the 1, 2. So if this comes in, I get a 5 here. So I'm so sorry, guys. Excuse me. Just telling MonteCrypto that I just ordered a mic with a mute button on it. So if I can get 5 here and I come down in 3, well, now I'm chomping at the bit to be a buyer here. Fully aware that if I break here, if I go lower, well, now all of a sudden I'm going to tighten up that stop here because I don't want to let a winner turn into a loser. But if I get this, I wouldn't immediately think, oh, failed to make it. No, we're going lower here. I'd be looking for that. So really, that's your opportunity to add to this position. If I get 3, let's see here. We'll just keep it simple. If I get the little retrace here and I can come down, well, shit, is it not going to let me? I didn't make a copy of this one. If I'm going to come down to something like this, well, now I got my next opportunity to be a buyer. All right. So this is when you get a sequence like this, where you anticipated the initial retrace, you got your corner here. It's technical. Right, i.e. golden zone. So we get the golden corner. I've got all of this leading geometry here to kind of guide me through that trade. When you can get the 1, 2, 1, 2 and get into the 3, 4, I mean, a scenario like that, and we do not know if this is going to play, obviously, right? It's all just potential. But this is the reason I continue to be a proponent of Elliott Wave right there. Because while this is not going to play out, certainly, every time there's going to be a percentage of these that will play out. But when you get this, it's an unfair advantage. Really, that's how I think of it, because you know exactly what to anticipate, and there will be trades where this will follow it damn near like exactly as you've drawn it. So when I say the reason to continue with Elliott Wave, and people say, God, it's wrong all the time. Well, yeah, we're forecasting, right? And as to whether or not that can be done consistently over time, question mark, right? It's a question of skills and ultimately comes down to your money management. But when you get into one of these series, it is literally an unfair advantage. What? 1, 2, 3, 4, 5, and I'm looking for it as I'm projecting forward. It's not that I'm looking here going, well, there'd probably be a little resistance up here. Well, I'm looking left here. I'll probably struggle with this. I am forecasting this, and I can do it with Fibonacci relationships, right? And I have a general sense of what an impulse, what it should look like, as opposed to something that's, you're kind of forcing it. When they flow, when they move like this, you're in tune with it. It's almost like, like athletes being in the zone, right? Where it just looks effortless. That's kind of what I'm always looking for in a trade. So if I'm, someone, a member or a student or YouTube sub presents something, if it doesn't have an anticipatory, like I can feel where that's going, I would simply just say it's not good enough yet, or it's not mature enough, and the count is questionable. There's so many assets to trade, right? Whether we're talking crypto or traditional, there's so many that there's no reason to ever force a count. I will wait for what I'm looking for, which is something where I can feel it, where I can see it, I can anticipate it, and that's always a function of what's come before it. That's the advantage of Elliott Wave. It gives you a structural foundation from which to work on. Oh, I got 5, I got 3. Now, that doesn't mean that I can't go down and take out this low, but I can now anticipate what's coming next. Right? That's the advantage of it. So you'll note here, as he's laid this out, this would be your initial algo target. There's first target. This, the -618, second target for this algorithm. These are going to be very close to the 100%, the 127, 138 window, and this is going to be the 1618, 175 window. Right, so I've got just 3 beautiful targets here, all in line, all in sync with that geometry. That's why you do it this way. So that's just great work, Grant F. There's not a lot that I need to add here. There's nothing to correct here. There's no alternate that I can see. This is just a textbook. So there it is, right? So waiting for you right there, which, perhaps you're you're 80-20 crypto to traditionals, and you hadn't looked at Intel in a while. This is a great example. I mean, I'm likely to follow Grant right into this trade, which happens to me all the time. Members will present something like, you know, I hadn't looked at XYZ in quite some time. That's a beautiful looking setup, right? And so there you go, right? If anybody, you're looking for a trade right there, you're coming right out of a golden corner pocket. That's about as good as they get right there. Knowing you've got that 80% odds working for you. You've got an algorithm at your back here. You're coming right out of this. Well, you're not out of it yet, but you're at a technically significant level here. If this pops out of here, right, you know what to anticipate. All right, let me. That's Grant F making my job easy as he usually does. So I don't think there's much else that I can add there. I'm just going to move on to Mr. Jack 245. Oh, FSR. This is one of his faves. I think you posted this. Is this? I want to say, oh gosh, I forget. I want to say this is fasten. Yeah, this will load up in a second here. Hang on, I'm gonna turn my fan on. It's hot here. Fisker, that's what it was. All right, so I got to do this.
It looks like it popped this morning.
Yeah, it does. Holy smokes! Yeah, nice call. Oh well, okay. So this is just what a great example. I love this because, particularly when it's happening in real time, because so often, if somebody's watching a video that I've posted up, right, and I'm referring to something that has previously happened, like this here. So this is just what a great. Thanks, Mr. Jack. This is a beauty. All right, so this is almost identical to what we were just looking at in Intel, right? With the exception of what's come before it. So we've got a potential low down here, working off of the proposed low. Well, what do we see, right? Clean 5, right? And I emphasized this yesterday, right? At the end of the day, the genius of what Elliott concocted here and what he identified is the way the market moves ultimately, right? It moves in 5s and 3s. And I was kind of dwelling on this yesterday. For the technician, my proposal to you is that what you want to be looking for is this at all times. It's a swing. It's an internal retracement. It's going to break one of those two pivots eventually. It's either if it breaks. Oh shit! I didn't want it to do that. Hang on. It does that. If it breaks above, right? If we go here, internal retracement. If we break above, okay, we have the pattern we're looking for. Now, if it keeps going here and we go a little higher and we come down and then we go again, well, to your eye, what I'd want you to look at is it's a series of 2 3s that are connected. So I got this 3 and then I've got this 3. So that's really all the market does. Is internal and external retracements. Now, there's all sorts of complexity in the midst of it. But at the end of the day, if you're simplifying pattern, it's a constant just repetition of internal that goes external, internal that goes external. So when people ask me what type of trader I am, my response is always, I'm a retracement trader because I don't buy things that are going up like this. Right? I would never, like if someone presented that chart to me as a potential opportunity to be an investor right now, I wouldn't go near that. So I would just wait for this to, whatever it's going to do here, however far it goes, I'm waiting for the retracement. Right? I like that you can see the technical event that happened down here. So off of the low, 5 up. Well, here's 5 down. Well, we know the odds are very high, not impossible, just improbable that this is going to end with a 5. So so this is where Elliott is useful. And it's not always, right? It's not always adding to your analysis, but when it is, it has significant value because I can look at that and say, well, the odds are this is not done. Because it would have been very easy to look at that and say, oh, hey, well, you're at a 50. Why wouldn't you buy that? Right? You're right here. Right here. Why wouldn't you buy that? Right, simple. There's the retracement. That's the level. Wait, Sam, you're always talking about that being where the algorithms are kicking in. Well, here's where a little nuance of Elliott Wave is adding value to your analysis because I know the odds are, again, emphasis, odds are, this is not done yet because I've got 5 down following a 5. Right? Now, what comes off of it? A 3. What comes off of that? Now, it's small. Wait, I'm on a 2-hour. Shit, I'd probably go down to see it better on a 30-minute. Well, what comes off of that, right? So I can see very clear. So I know following a 5, if I get a 3, right? Now there's squiggles in the middle of it, right? But at the end of the day, it's a 3. And then I get another 5. Well, That's literally right out of my Elliott Wave principle, Elliott 101, 535, I've got a zigzag. Now I'm coming up just a little shy here, and you might look at that and say, huh, interesting, didn't make the golden zone, right? So we can identify why not, right? Trading principle, trading principle number 2, if it doesn't pivot at the median line, it may hover around it. That would be principle number 4. But what the trading principle 2 is looking for is the tick off the median line. Right? You see it all the time, right? There's a great example of it. So as you're looking at that, you might have been there. If you didn't draw that median line, you might have been down here waiting for that entry, and you missed it by 3 ticks, and you missed all of that. If you don't have an awareness, right? We want to look for all of it. Where can we get confluence? So we're in between, but let's see what I have here. I have pattern, price, geometry, right? All in confluence points right there. Boom, look at the reaction. Now, where's it going? Now, I haven't gotten there yet, but just as I have the same thing happening here, I have that same probability that I'm going to get there because we're working off of another, although it's not technically in the golden zone or at it, it's close enough, right? So certainly you have this potential here, exactly as I was just talking about with Intel, right? We know that that there's an algorithm participating here. That's all we need to know, right? And they leave footprints. So we know that's a first target. Well, if this is 1, 2, what's the next deduction I can make? Should we get here, right? Should we get here? Well, if we get here and we get to the median line, that 80% is burned, right? You have to understand that. That's gone now. Right? You no longer maintain those same odds, but you could recreate it again. So if I were to get that and I were to come again and get another 3, I'd draw it again. I would just, let's get that off of here. All right. So I would get another set of median lines, or sometimes it will be too steep. You might have to work with a channel or something other if it's too steep. But that's the only way I can recreate that 80%. Now, that doesn't mean I'm not still maintaining my target here. But of course, you have to recall that there's always going to be an algorithm on the other side. Now, in this case, all right, I can just eyeball it and say, well, I know it's blown through the golden zone, right? But you would just force a habit. Oh, okay, we're through the 786. All right, where is that going? Well, again, that's not wherever this pivots. It looks like that's 1, 2, and we're working on the 3. Although, 30-minute. That'd probably be internal. It looks like we're working on the 3 here, 4, 5. Not going to be the 3. That's going to be the 1 of the 3. So all this is doing is alerting you to the fact that, okay, I've got a massive rip here. Something is going on, right? Do we have earnings? It's post earnings. Yeah, it looks like it's post earnings. So something has happened here. Now, nothing says that it could do that. It would be unusual for it to go just that far in a straight line. But all I'd be looking for is the next 3. So this goes on my alert list. Okay, watch list. All right, let's confirm that it makes the median line. And you can kind of look at it and go, that kind of all makes sense, right? I can kind of see how that might be the prior resistance here. If I it doesn't have it on here, but I put my volume profile on it, there's likely going to be a cluster up here or through all of that. 5, 3, 5. Classic zigzag, hit the median line just in front of the golden zone. Look at the reaction, right? Beautiful. Great work, Mr. Jack. So is there a trade there now? No. But that's just a good example of everything we teach right here happening in real time. There is no, I had never seen this before. I had no idea Mr. Jack was going to post that. It's the first I've seen it. This is not an asset that I follow, but I will now. Great work, right? So this being burned, now you're just waiting for the retrace because now this is back to, I feel like I have an unfair advantage here. Not that I'm complaining about that. Right, that gives you confidence in the next trade. I know what this is doing. How often can you say that in the market, right? What other methodology gives you that sense of conviction in what's happening? Sure, price action, not to make in any way slight of other methodologies. But I can just tell you in terms of pros and cons, one of the massive pros of Elliott Wave is that I feel like I know exactly where this thing is going. Now, that could just be in my mind, right? But at least I feel like I have an advantage here. Okay, 1, 2, that doesn't mean that this thing couldn't be down here, right? Nothing is impossible in the market. I was thinking this just the other day. I used to say, some things are just impossible until I saw crude. Like I used to say, well, it's not going to go below 0. And I used to say that until I saw crude go below 0. But many of you may remember that from last year. So, sky's the limit, right? You don't want to eliminate any possibilities. But this, just to continue going straight, seems less likely because I harped on this yesterday. The temptation for the people that caught this will be overwhelming to want to take some profit there. So one to be watching. All right, let me keep moving here because we got a lot of them today. Great work, Mr. Jack. That definitely goes on my watch list. All right, next up, I got Pizza Man. Looks like Zoom. All right, so let me kill that one. And here, I just get your, let me see if I get the right one here. Oh, I have to do, so when they give it to me, I get it. I have to save it so that I get a working copy. Otherwise, I just get an image and I can't really work with it. So give me a second to let this come over. Sometimes if their work is so good, I don't need to. And Pizza Man is also just another great example of a member who came in. He had skills, but in terms of where they've gone since he's been a member, there's great improvement here. So I'm going to make a copy of this so I can dig in there a little bit. All right. So I think you've been all over this one. I think this is the third or fourth time you posted this. So you must be in this trade, or it's something you're trading and watching. So let me get a working copy. Right. So one of the things you'll notice that when they come to me, I go indicators last place I go, right? I almost don't need them, right? You really don't, but they can give you a little more confidence. All right. So here, right, this look, when you first look at that, right? So, to the unskilled eye, you might look at that and go, God, what a cluster F. How is anybody making sense of that? When I see these, I just see a journeyman technicians, right? So this is a guy who's put the work in to work through all of the subdivisions and come up with an analysis that gives him a roadmap. Okay. Kind of the same thing happening here. Right, we've got a pivot low, a proposed low. From off of that low, I can see a completed 5. Right, that really at this point in time, that's about as much as I need. Okay, I want to put it in context, right? So I want to be aware of what's come before it, right? But here, as we rip through the COVID season, right? Zoom straight up, and how does it go up? Right, in a clear 5, right? Clear impulsive pattern. So as it's retracing here, what are we seeing? Right. I mean, no matter, all the that's all, again, it's all it ever does. Internal that goes external. Same thing. All right. So we come to this pivot. So you might look at that and say, okay, does that make sense there? Well, all right. Just right off the bat, it starts to look pretty solid. So you can see he's wicked off the structure here. So we've got this high volume node here, right? Size, always going to look to hide it in volume if they can. So as we come down here, hit that structure. Oh, I'm sure he's got it drawn here. Sometimes these guys use different colors than I do. Let me just get that so I can confirm it. I don't always track their colors. Okay, so that interesting, right? So almost the exact same thing. Well, we get a slight front run off of the golden zone here, likely working off of this structure, although that's 5, 3. Oh, that's kind of a cluster. Looks like you can get there. Now let's look in there, Pizza Man. How are we doing that? This looks, that's I see what that is. That's up here. You just left them up there. All right. This is, that's a toughie, right? So it looks like you have to do, it looks like you can do it. It's an ugly 5. Well, there are times where, well, great. Look, we're out here on the daily. There are going to be times where, the Elliott, as I was saying this yesterday, Elliott's not perfect, right? There's going to be a point. Every count breaks down at some level, right? You can't say, I'm down at the 60. Now I'm down at the 5 minute. Now I'm down at the 30-second, right? At some point, the counts break down, right? You can't dig another 5 out of them. So you have to just be reasonable about your expectation as you're working through those subdivisions. But here I can see I'm ending with a 5 here. So I can kind of work backwards into this. Looks like this would be 3 there. Here, often I'll do it this way. I'll start from the pivot. Can I finish with a 5? Because I have to finish with a 5, right? So can I see a 3 ahead of that? Yeah, there's a little 3. All right. Can I get some sort of looks like that would have to be 1, 2, 3, looks like 3, 4, 5, right? So I can, is it ideal? No, right? But I can live with it, right? So this would be enough here, particularly ending with that 5 and where I am, structure, golden zone, put that on there and say, okay, what comes off of it? Well, it kind of looks like I can dig through a 1 there. Now I'm right back to what am I looking for? So I've had this impulse. Now I'm just looking for the 3. Give me the 3 because that's what I can anticipate based on what's come before this, what's likely to come next. Not what's inevitable, just what's probable. So as we look here with his, well, he's got some pretty sexy targets up here. So look at the potential return on this trade. All right, now we're on a daily here. Right, that's 25.5 to 1. So is it worth the effort here, right? So it's like 3, 4, 5. If I'm going to get up here, this is going to be 1, 2. If I get here, let's see, put that in context, right? So this is why it's worth doing it this way. If this is 1, 2, right? 1, 2, that's not going to be 3. Right. I mean, at that point, you'd barely be longer than 1. Right. So you'd be anticipating if this follows this track here, if this is 1, 2, that's likely not the 1, 2 of the 3. That's likely the 1, 2 of the 1 of the 3. So you can start to get a little more aggressive here and say, hey, if I come out of here and I go up to that 3 and we get that 1618, right? Our most common location, right? Let's put it right there. If I get that, I'm not necessarily going, oh, grab it while I've got it, because I know the potential here is way the hell up here. Now, what's that going to be? There's your, oh shit, it's so skinny, I can't see it. I mean, is that a good enough return for you? 47.3 to 1, right? And that's, understand what I'm saying. If Zoom goes to the most common location found for an Elliott Wave third off of a completed impulse in a 3-wave correction, this is going to be a massive winner. Massive. Now look at the risk, right? I mean, you could fatten it up and say, oh, okay, there's only 8.64 to 1. Okay, so we can make this a little bit. I mean, this is a function of your risk tolerance. So you could give that a little more room, right? If you really wanted to be in this for the long term, or you could say, hey, right, my assumption is, right, and this is typically how I frame it in my own mind. My assumption is if I get here to this golden zone here and I'm going to hit that 50, it's a little hard to see. I realize that, right? It's always easier when it's your work. Here's the 50 relative to this golden zone. If I'm going to come down and tap into that 50 and I've got another golden zone there, I'm very interested in that trade. I'm very interested in the long side. And if it goes lower and I get stopped out, okay, no problem, right? So maybe it's going to go a little bit lower for whatever reason. I'd much rather, I want to take the small loser here and reevaluate, because I would be very, very quick if I got this to go again. And I go 2, 3 times, right? Because the upside is so significant. As long as these losers are relatively, emphasis relatively small, which is why for something like this, you don't necessarily want to go balls deep here. Okay, it's setting up, right? If I get the pivot here and it starts to look like, okay, looks like we got a good start on it here, I'm not going to go all in here. I want to get a piece of it because I love the setup and I love how little the risk is here. But I want to keep some ammo to potentially add, because I'm playing this as the 1, 2 of the 1 of the 3. Now, if I'm just a price action trader, I don't get to forecast like that. I don't get to think ahead that much. All I'm thinking ahead to is where's the next resistance level? Where's the next support level? Right. This is why we teach Elliott Wave. I promise you, there's nothing I haven't seen or traded, with the possible exception of the lunar cycles, and I've seen that as well. But the planetary, some of the stuff it's just beyond me. It's right how that's influencing the market. But lunar cycles, there's something to that. But there's very little that I haven't tested, traded, or seen over 30 years of doing this. I have people pitching me ideas all the time. If I hadn't been through all of that, I wouldn't maintain this. If I didn't think it was useful, I wouldn't teach it. So the thing that you have to recognize is that your analysis, your blueprint, your forecast, your roadmap is going to be wrong on a regular basis. You have to be at peace with that. The market is going to head fake you on a regular basis. Remember, you are competing against the smartest people on the planet that are trying to pick your pockets. And the shorter the time frame that you trade, the more directly you're competing against the algorithms, right? Which you can't beat. All you can do is try and get behind them. So looking at Zoom out here on the daily, this is great analysis, right? I'm out at the time frame that you would always want to start at anyway. When you're looking at an equity, you'd always want to start at the daily and then work down. But in doing that here, I'm reducing some of the competitive element here. So I'm now trading more with retail. And I've got this nice confluence here. So I'm not there yet. So note, right, the emphasis here, we're not there yet. He's just laying out the potential roadmap. Now, this could do that, right? There's nothing that says can't do that. And then you're like, boy, that looked like it was going to be so good. It just didn't happen, right? The market does that all the time. But right now, as this is rolling here, so looks potential double top. Right now, we focused on this a little bit yesterday. Remember, a B or a 2 that doesn't break the pivot, right? This is always a heartbreak in this case, for the bulls, right? So, and this is what creates the 2 or the C, or pardon me, the 3 or the C, because all of these bulls, right? All of these buyers down here, they're pushing to get to that pivot because they know their stops up there, right? A 5-year-old looking at this knows their stops up there. So if they can't get them, because that's fuel to get, right, running those stops is juice to keep it going. If they can't get it there, that's why it rolls over. Same thing with the 2. They're trying to get to the low. If they can't get it there, that's what creates the 3. Right? So this is the market is telling you something here. It's talking to you, right? Because if they could get it there, they would. Right. So sellers had to come in here to overwhelm that natural desire for the bulls to go get those stops. They couldn't do it. Right. So where do you think it's going to go next? Right. And emphasis. Where would you anticipate? Where would you think that's going to go next? Well, we get a corner pocket here per the framing that he's done here. It looks like a couple of these are off, but as you guys all know, when you change time frame, some of these will move a touch. So right now I've got a corner pocket here, right? Now it could go beyond it. I still might look at that because I'm looking for the geometry the market is responding to. So here, look what I get here, right? You see, I've got the confluence of a second median line here. This one right here is coming in as it would be hitting this median line, as it were hitting the larger degree 50, as it's hitting the golden zone, as it's hitting of a high volume node, right? That's a trade you can take, and you don't necessarily have to sit here with a limit order and say, okay, come and get my order. I might, right? Depending on how fast that's coming down, I might wait to see a little reaction because you don't want to just try and catch the falling knife. I mean, there are times, right, when it's this is pretty damn good, right? So if you get there, it wouldn't take much of a reaction for me to go. Now, if I'm day trading in the futures market, all I need to see is just a little reaction and I'm in. But here, I might start with some options, right, to see how it makes the turn and then add some of the underlying. There's lots of flexibility if you add in, that's just another set of tools that you can use to get that same directional bias in the market. Or what's unusual with options, you can create a non-directional bias, as in, I just don't think it's going anywhere. But again, not to digress into an options discussion, but I want you to look at the potential that's there, right? Just that potential, right? It starts to look, holy smokes, right? Look where we're going, still going. Right? Perfectly valid scenario here that I can't get if I'm analyzing this with anything, emphasis, anything but Elliott Wave. I can't make that projection because it's not in the context of what's come before, the 5 and the 3, and then the 1, and right now just a potential 3. All right, that's good work, Mr. Jack, as usual, right? Again, another very skilled Elliottician, right? Giving us setups here. That's what they are. Shit, half of these I mark and go, I'm going to chase that too. So this is one that goes on my watch list. I'm setting an alert. We get down here, I'm in, right? I don't even have to think twice, right? And that's the advantage of this. Here, you prep it, get the alert on it. Unless there's some news event here, we have earnings coming up. Looks like we got earnings at the end of the month, or it looks like it's on the 30th. Oh, I want to be very wide awake to what's happening right there. All right, let me keep. Oh, pardon me. That was Pizza Man. I thought it was Mr. Jack. Pizza Man, good work. Pizza Man giving me 2 in a row here. Oh, yeah, we've got time to do it. Okay. Let me go. Pizza Man, what are you giving me? LI. Copy link. Okay. Let's go see what we got with. Takes a sec for it to load, and I would anticipate you'll see something almost exact, right? So he's become very consistent with this work, right? So his charts, when he posts them now, they all have a similar look. Okay, let me get that saved. It's really rewarding for me to watch new traders come in, and they might post something that, of course, we're never we're gentle in how we might guide someone through maybe thinking twice about something or an area to touch on. But the progression that I see traders making, big part of why we do this. All right, so here we go, coming off the low. All right, it's a little wacky here, but again, note the effort that went into this, right? So he's worked through all the subdivision. So you might look at that right off the bat and go, is that actually going to work? Well, now here we are on a 4 hour. What the hell is this? To tell you the truth, I got to look it up. What is Lee? Oh, where's FinViz here? Sometimes I'll just go over to FinViz if I don't recognize it. Let's see what the hell they are. Is this an auto company? LI? I don't recognize them. Lee Auto? Must be. Yep, Lee Auto. All right, never looked at it before. But fortunately, as a technician, I don't need to know, right? Remember, the premise of technical analysis is that all the fundamental data that can be known at any moment in time is reflected in that price, right? So you don't have to worry about the fundamentals. I mean, you don't want to trade in a vacuum, although some people will tell you there's an advantage to doing that. So you have no influence from news, media, Twitter, whatever. But if you're just looking at the at the technicals, you already know the fundamentals or how the market is reacting to the fundamentals. Right. So while I've never once looked at this asset before, I could sure as hell trade it. Right. And I'm getting a little help here from Pizza Man, who's launching me into, okay, I got 5 up. It's a little wacky, right? But here, that's essentially my big 3, right? It's the same thing, guys, over and over and over. Maybe different shape, different angle, but it's always just the same. Internal that goes external. That's all it ever does. So I got a swing. So what do I have here? All right, I got a swing that's gone internal. Now, are we going external? Well, right now, it looks like I got a double top up there. So tried to go external, got rejected, or didn't quite get there. So down, here we go. So it actually makes sense. But, it didn't go there. Well, it's not likely to go in a straight line from here to here. God, I never get these on the first click ever. It's not likely. It could do it, just not likely to do it without this along the way. It's much like we started with. Nice overlap here, right? So if you had this, right, because you could draw another. Oh, has he drawn it? No, he's got a channel on it, but you could put another set of median lines on this. Right. Now, sometimes it could be that here is too steep. Right. So there's actually a good example, right? Great example, right? You'd think we'd work these out, right? This is all just on the fly. Okay. So here we look at this and you say, okay, well, I'm right. So no, we're coming. Let me get it all in. Okay. So what do we have, right? There's the pattern. There's the 3. So first thing we have is pattern. Now I've got a 5 that's followed by a 3. All right, I'm already interested. Now I'm sitting right here. Oh, that looks like that's the 50, right? These guys color it slightly differently than I do. So I've got this pattern here right at the 50. Look at the Vegas wave, right? It's very easy to go eye blind to the Vegas wave, right? Because it's just on every chart. You forget to look at it. Where are we, right? We just tagged the 233. We've got a couple of ticks through it. Look at the reaction. Now we've gone up here. God, it's literally exactly what I was describing with Intel, right? We don't make it, right? Now, does that mean, right, trading principle number 4, a swing down equal to or greater than the swing that failed to get there? Well, not necessarily, right? It's just what I was saying with Intel. I'm anticipating this, right? And now look, you gotta look closely. What do I have there? Right, just another 3. Right, there it is, just on a smaller degree. Down to 1 hour, that's going to look smaller. Right now, there's the reaction. There's the golden zone. His color is just different than mine. So if I drew it up off of the corner. Right, there's the golden zone right there. As he might have his just slightly off. So there's the 3 that's coming into that. I'll probably look again. I could, if I wanted to really press, I'd go, okay, if I'm really was going to tee this up, okay, there's the 100 right there. So it's not uncommon for the algos to front run these, right? Because they're not going to make it easy for you. So often you'll see the golden zone front run. They'll see a front run on the 50. So a little front run here. I'll look at the confluence here that I have right here. Right. So I've got the A to B equals C to D. We're coming up just a few ticks from it, just shy of the golden zone. I can see a 5 followed by a 3. Now, you got to understand, right? We never know for sure. This certainly could roll over and turn into a 5. Right now, now this starts to come into play. If we go into a 5, something else is happening here because we can't end with a 5. Right? We can't finish it here. So if this 5 can't be followed by this 5, we're going to apply Elliott Wave Theory, right? The odds are, let me rephrase. It's not that that's not possible. It's that it's not probable. And this would throw a massive monkey in our wrench here of analysis here, because if I go 5-5, I'm not looking for an impulse to come off of that. Now, maybe you're down to a 15-minute and you got to turn this into a WXY. Maybe it's A, B, C, W, X, Y. There's always a way to solve the puzzle. Sometimes you got to squish them in there a little bit. But if this turns into a 5, I'm no longer interested in the buy because I know the odds have changed. Even though I'd be coming right here into a golden zone, I know there's an algorithm there. My pattern doesn't match what I'm looking for. So I'm unsure. When in doubt, you stay out. I'm not sure if this rolls down. If I get a new low here, I got a 5. If this takes out that low, I'm not sure now. Maybe something unusual is going to happen and it's going to rip right out of here because there's an algorithm there. Maybe. But now I don't have pattern. I've got price, I got geometry, but I don't have pattern. I want all 3 of those. If I'm going to put money at risk, that's not too much to ask. I want pattern, price, and geometry, or time, and geometry being a substitute for time, or another way to look at time. I want all of it. As I was just saying, there's so many choices of what to trade and where to trade and when to trade and what time frame to trade. If I'm looking at this and it rolls over one more time, next trade. I'll wait until that's clear and I can find pattern, price, time, and geometry. But this is a good looking setup. So right now I'm here, I'm on a 4-hour, just out of curiosity. If that's done right there, well, it's a little bit of a choppy start. Right? It's not a great looking start. Right? Ideally, you'd want to see this be a little bit more aggressive. So you can I get a 1 in there? Not really. Here's what I can see. Right? I can finish this beautifully, right? I can finish with that 5, right? So the idea of an A, there's a little 3 in there. You can see it. So A, B, C, right? So 1, so impulsive 1, 3 waves, and I finish with a 5. So I've got all of the ingredients as long as I don't drift lower. But already it's a little shaky. Shit, even down to the 15, I doubt that's going to look great. Maybe you got a little diag going in there, maybe, but I want to be a little more certain than maybe, could be, might be. Why? Why risk money until you're like, oh, I know exactly what that is. That's the trade you take. Otherwise, oh, I like this, watch list, right? Confirm it for me. Give me something else to work with. Right? Let me see that there's really going to be a 5 here. Maybe this is just some sort of an ugly diag. Maybe. I'll wait until I know. All right, so I think that gives you a decent look there. And Pizza Man, your work is solid here. Now we just wait and see. Does this kick for a 5, right? Can we lean into this being the 2, right, at that confluence point? Remains to be seen, but 1 for the watch list. All right, let me keep moving. Masa, okay, we got, looks like T. All right, so let me get that on there. Oh, all right, I guess I can get rid of that one. Oh, Masa, you gave me, that doesn't look right. Let me get that again. Copy link. Let's make sure I got the right one from you. Yes, I want to leave that. Yes, I'm looking for T. There we go. Let that load. All right. Masa, also a skilled Elliottician. Work just gets better and better. All right. AT&T's got a few things hidden here. Excuse me. Volume profile on the left. All right, well, this is a 3-hour, so I got to put it in context. Like, so for me, this would be dangerous, right? And so, of course, he's looked at this in a larger degree. So I haven't looked at this. So the first thing, I need to put this in context as to where I am in the largest degree. So right off the bat, I'm going to start going up in time so I can see where we are. All right, is that enough? I'm gonna hide that just for a minute so I can see where the hell are we. All right, let's go back. Is that enough? I'm going to go out to the daily, right? So typically on an equity, you'd start on the daily. So do I have anything here coming off of this? Do I get, Well, that's kind of ugly. Looks like you'd have to do that. Let's see, let's get this wicked off here. You'd have to do that. All right, so it holds. I'm going to guess this is technical, just a hunch. Not quite. Didn't quite make it. Let's just see if we go from the lower pivot. Even here on the 2, this might be. That's a little far for a front run. Hard to say, right? Could be a front run since they got the target, right? Now, how do you know it's an algorithm, right? You've heard me say this many times. It's not this. It's this. It's the reaction at the target. So if I go up here, now I know I'm well past swing the dominance, right? So as I would refer to those, these are the dominant swings, right? The dominant low to the high, because that's all the algorithm sees, right? It doesn't care about anything in between, right? That's all it's seeing. Right now we've broken. Now note, so this is a good example because I remind you guys, this algorithm breaks on both sides regularly, right? They all break at some point, right? Or we go sideways forever. Well, here's a great example out here on the daily. We broke on this side, and I can just look at that and tell you we broke on the other side, right? So they're going to stay with. Now looks like some of these were probably good. Oh shit! Come on. Looks like that. Right, so we got this here. This looks like it's too far. This looks like it's pretty good. This might have been there as well. Oh, that's too far. Right, so you guys know here, if you break here, you go back one because that's what the algorithm will do. All right, so here we've got this golden zone tap here. Now we get 2 and through. It's just a little sloppy, right? So interesting where it goes back to, right? Interesting. Right back to the golden zone. Now this is my partner's one of his specialties. That would be a Monte pole. I'm pretty sure that would be right. But if I go swing low to swing high on a dominant, I break again. Right. So it's just this is choppy trading, right? So even the algorithms are losing money on both sides. They don't care. They'll eventually get in tune with it. But right here on this level, they're breaking on both sides. So we're out here on this daily going, okay, what the hell? Help me here? Well, I've got something, just a waterfall, right? It's just a free fall and it doesn't have great separation, but that's likely you'd look at this and call it impulsive rather than corrective, right? So certainly since we broke this low, this is just a free fall. It almost 1, 2, 1, 2. It almost doesn't matter. It's just this is so far and so fast, and we're going we're going from 40 to 25, just a free fall. So all of this is just the reaction to that, right? The market's got to after going straight up and then straight down, the market's got to deal with all of that, right? Okay, what are we doing here? Well, now as I look at this, so here golden zone here as he's got it. So now I'm going to start coming down to some lower time frames because now I got some context. All right, so it sure looks like this would be some sort of a flat. Here we'd have the X going past. So we'd have ABC to the W, X, ABC into the Y, right? So a corrective formation. So all of this is a reaction to all of this, right? It's got to correct it. So look at the nice geometry. So there's 3 going up, right? We can't end here unless I get a 5 in it, right? So this is the B. Now we go up, I get a clean 5. So I've got a good candidate here. We don't know that that's the pivot that's in because we're not quite to the golden zone. I've got a good candidate. Could be here, could be a little higher. So I'd be watching this, but here's what I would not be doing: buying this. You say, well, hey, it's going straight up, man. Look at the range. We've gone from 26 and we're up to 33. Man, it's going straight up. Don't you want to buy that? No, I don't. I absolutely do not want to buy it. If it's going to pivot up here at the 5, something's finishing here. So it's a discipline because it's just human nature to say, oh man, this thing's going to the moon. Right now, there are many that won't know the 618, they won't know the golden zone. So they might think, oh, that could really rip. Right here, you're just waiting for this to finish and start what is inevitably likely to come. The correction, because the people that bought it here, that temptation, right? We hit some resistance up here. It starts to come down. Stops get triggered. The trailing stops get triggered. The bears start to pile on, and the whole thing starts to come down, right? Oh, you see it here. So as this has gapped now down and we've rolled over here, you're seeing the reaction to this as it completes, right? So here's just out of curiosity, right? Because I'm always curious how it responded here from this length, all right, kind of in between, right? So somewhat surprising here. So that looks like that's news related, right? So as we free fall off of that, pretty good gap, right? So now as you look at that, we know markets don't like to leave gaps unfilled. So odds are this is a gap that's going to fill. But right now we're just drifting lower. So Masa, I'm kind of curious what your thought process is here, because I don't get that. Members don't give me, okay, I'm short from here, I'm long from here. I just get their analysis. So as you're looking at this, that's kind of a rough start to whatever this is. Really, this just looks to me like you're in a massive accumulation zone. I don't know that there's a trade here, Masa. We've completed the WXY. That's not boy, you can barely get a count on that. With that gap, I'm curious. I'd be curious as to what you're thinking here. I mean, perhaps the thinking is if we come down to this lower range down here, you can start looking to be a buyer on the anticipation that this is just going to chop in this range. But I don't like to forecast that. So for me here, perhaps you're looking to play this down to look for a better opportunity to be a buyer. Here's your December 2018 low. My guess is that's what you're looking for, is the next buy. So reaction to the reaction. I got to tell you, Masa, that's not one I'd be chasing here. I'd want to see something come out of this, right? That might interest me. All right, if I got started on this and I saw, okay, if we came off of this low, assuming, right, we don't know, right? If it comes down and tests that low here, I'd want to see something, at least a 5 come off of that, and I'd wait for the retrace. So this would be one I'd be kind of waiting and watching. I'm not sure what you're thinking there is. To me, I don't see anything there to warrant a trade other than maybe waiting for it to come down here and test the support. That's about all I see there. All right, let me keep going. Okay, Volcker. Oh, I took a peek at this one because I thought this was really an interesting count. All right, let me get rid of that one. Your work is solid here, Masa. I don't see a trade coming off of that. All right, this is pretty sexy work here from Volcker. This is not an easy count. In fact, I consider this one of the toughest on the board, certainly across the FX markets. Now you're sending it to me, excuse me, in a 15 minutes. So FX, the shorter the time frame, the more difficult it is. So just a reminder, right? And FX is 99 algo driven, 99%. I mean, given the trillions of dollars that trade there every day. So I had to pull out here because I took a peek at this to look at this because I was like, whoa, that's interesting. So this takes some real skill here to get this, because this is a very difficult count to read. Is this my working copy? Can I draw on this? No, I can't. Yeah. Oh, yes, I can. All right, I got to back up here. Okay, this is a bear of a count. Oh, I got to go 4 hours here. Okay, so what are you going? You're going WX. Okay, so we're going WXY. So you're looking for this. So ultimately, the idea is here we're going to go this way. We're going to do this, right? So out in a much larger degree, same pattern, right? Same thing. All right, I can't even get any more than that. Wow, I got to go weekly here. This is interesting that you'd be out here, Volcker, but I know you like the currencies. Okay, so some assumptions here. So the idea, well, okay, so right off the bat, we can see this, right? This, right? And Elliott 101, right? We can spot the clean 5 there, right? Now 3 down, but we get a new low here. Weekly low, right? So that's an extreme. Now, so coming off of that, so this, I'll give you an alternate here. I might do it a little bit differently. And when I say that, right, whenever I say that to a member, it's not that I'm implying that their count is wrong. I just see another way to count this. So it looks more to me like coming off of this low, like you could get a 5 in here. Definitely. Here, I'll stick with your count, right? So I might come back and revisit that with you I'll post this in our DM exchange. I'd have you look at, I think, so one possibility here is coming off of that low. This is just a big 1-2, right? Or an AB. I think there's a 5 here that you might look at as an alternative. So we get this little diag into this A, ABC into the B, and he's working through the C. Working through the C to give us an ABC to give us the X, so he can go up here and get the Y that's way out here. All right, so this is a very ambitious trade. So going from the daily, I got to go down just to get a look at it. All right, so okay, this is interesting. So 1, 2, 3, 4. Well, that would be unusual. So I would probably, we'd get to the same. I would count that a little bit differently, but I would get to the same location here. So this is the good one. Oh, well, we'd arrive at the same destination. There's your 1, 2. Now this gets really tricky here. So we go 1, 2, 3, 4, and then this takes some skill to get this right. So from the 4, we finish the 5. So we get 1, 2, 3, 4, don't overlap. So I get an impulsive 3, right? So we need the qualifier of the impulse. Now this is sexy here. This is a running triangle. So we go A, we expand the B into the C, D, E, right to the median line. All right. So, question is the market responding to the geometry? Well, you tell me, right? Here's the inside range of it. Now we're back to the median line, right? Trading principle number 3. If it's not going to pivot, it may hover around before it makes that decision. Where are we going back to the upper parallel or to the lower parallel? Here we get a throw over. That looks like the 1.5 back to the median line. Now we got a little channel here. So we've kind of got a channel within a channel. So this would be after the 4. So all right, good for you, Volker, of spotting that running triangle. 1, no, you'd have to do it this way. So this would have to be A, B, C into the 2, right? There's the same, right? Always the swings inside of it, but the basic structure is corrective. After this, which is impulsive, we get sideways correction. Now we're starting down here. That looks like you got 5 into, do we have 5 there? 5 into your 1 wave. Here, right? So 1, 2, 3, 4. It's not much there. We are on a 4-hour. So working through could be its end. Could be we're still waiting for the B, C of the 2. So for any FX traders here, there's a nice setup, right in here. All right, as you can see, he's noting, right? So he knows right where to start the entries, right? So all he's trying to do is get an algorithm tuck in behind an algorithm. That's how I always think of it. So here's the 5 down. Now we're just going to sit patiently and wait for that 3, right? It gets right into the zone, right. Could be here, could be here, could be here, right? We just don't know how that's going to get there, but ideally you might get it something like that. You would want to look for it in alignment with the median line, right? Those are the outer parallels. You want to look for it. That would be that's a trade you wouldn't hesitate to take. Look, 5 followed by 3. So what do I get? I get price, I get pattern, I get geometry. What's the upside there? I got 3.4 to 1. I got 7.14 to 1, and I got 12.5 to 1. Right? Worth waiting for, right? I mean, it might do this, right? And you stop down like, oh, okay, well, it didn't work out. But as long as you don't let the thing get away from you, right? I emphasize this. The name of the game in trading is small winner, small loser, small loser, small winner, small loser, small winner, big winner. Right? It's avoiding the giant loser. It's so simple to say. It is literally the hardest thing to teach. It takes years. See, it has to happen to you, and more than once, typically, before you realize, oh, okay, I get how this works. I just got to eliminate the big losers. Well, very easy to say, right? I get it. But, again, I emphasize this. The big loser happened. It's a self-inflicted wound. You did it to yourself because there's absolutely nothing there's no reason you would have to take a big loser other than your own ego. Because that's usually what it is. Oh, shit, I know this thing. I know it's going down. I know it's going to go down. I'm sure of it. Oh, yeah, it's okay. It's going to be an unusual expanded B. I know it's going to come. Again, you do it to yourself. Trust me, I say that not with an arrogance. I say that from experience because I've done it to myself more times than I'd care to admit. These are always self-inflicted wounds, right? You don't have to let a big loser happen. You do it to yourself, right? And it's usually because you don't want to take the loss. But always better take the small loser. I often I'll use the boxing analogy, right? You get into the ring, you're going to get hit. You got to go into the ring anticipating you're going to get hit, but take the jabs. Take the body shot. Don't take the uppercut to the jaw, which is what that is. You don't put your hands down and lead with your chin. The guy's going to put you on your ass. You never need to do it. All loser, right? I can take the jab. Oh, okay, that hurt a little bit, but you're not going to knock me out. Don't let them knock you out because you're doing it. You're letting them do it to you. Right. Trading is warfare, right? On the other side of that trade, they are trying to take your money. You got to think of it that way. Are you going to let them take your money? Well, sometimes, yeah, they're going to take some of it here and there, here and there, here and there. Don't let that go. So easy to say, right? But usually, right, as I was kind of harping on this, and really this is the reason we started this. You can take my word for it, right? And I can shorten your learning curve, or you can learn it the hard way. That's what I did. I had to learn it the hard way. I was stubborn, right? I was arrogant, like, oh, I got this, right? I studied hard. I'm a smart guy. I got this figured out, right? My ego was always what was doing damage to me. I know that thing's going down. I know exactly where that is. That's going to go down. It's going to get, right? Until you realize that over time, it's always better take the little one. It won't knock you out. You stay in the game. The name of the game is to stay in the game. Right, you let them knock you out. Like, oh fuck, man, oh shit, I got to rebuild my account. Right, how long is that going to take? Am I going to again? Don't give them the opportunity to put you out of the game. 1, 2. If we get this in 3, we get pattern, geometry, price, pattern, all of it. What are we looking for? So first target here to the median line. Second target. Look how nicely he's laid this out to the outer parallel here. Right, so he's got a game plan, and he's got targets. Right, so this is a well thought out, looks like that's the 2618. So this is a well thought out approach to trading. Exit points clearly marked. He knows where he's getting out. Where is he wrong? Well, you could look at it this way, right? This is, I'm pretty sure it's what he's doing, right? Saying if it breaks this pivot, right? Or this pivot, 1, 2, where if that gets too far gone here, well, you use this too. Ultimately, you might, but you don't need to give it that much room. If I go that far, now I'm under 3 to 1. So that could be what he's doing, keeping it at a 3 to 1. Right? You don't want to. If you've got a target, you have 2 choices to make here. If you want to use the market here and use this as your stop, you got to reduce the size and hope that on the entry, right? In FX, the risk is always when you first go into the market because market makers are going to try and get your stops. So if you can give it enough room here and it starts to go, then now you can tighten it up. Now I can tighten it up. Now I got the risk rewards parameters that I'm looking for, minimum 3 to 1. Remember that when you first go into the market, particularly if you're a retracement trader, the highest risk in FX is when you first go into the market because they'll widen the spread. They'll do anything they can to go get your stop if it's close. Now, it can't be too far, right? Or you're setting yourself up for the knockout blow. So the way to do that is you ease into it, right? Reduce the size so you can give it room. So if they do go get that, it's not going to knock you out, right? If you take the smaller size. But if you're right, there's plenty of opportunity to add because there will be a retracement. Because if that hits, right? If we don't know, right? It's not there, but if that hits and it starts to move down, guess what? There will be another retracement, where you'll get the opportunity to be to add into a trend that is now established that you were trying to identify here based on what had come prior. Oh, I got a 1. Looks like I got a complex 2, but I got a 2, and then I got another 5. I got a 3. Right? It's always right. That's why Elliott is effective when it's effective, is because it's all tied into what's come before it. 3, 5, 3. I'm looking for 5. Good work, Volker. Very, very, right. That takes a skill level with Elliott, right? To know you got a running triangle there. Very well done. All right, what do I got here? I got, I always struggle with this one. Narwhal 72. All right, let me see what you got. Disney. Okay, Narwhal. Let's see here. Okay. Let's go to Narwhal. We get some very creative handles amongst our members. Gnarwall. All right, this looks good. Okay, thank you for that. Right, so letting me know you did this in log scale. All right, let me get a working copy of it here. All right, so I got all sorts of action here. Oh, what do we got here? Oh, you got that max momentum, right? So so this is good. So he's looking for squeezes down here. All right, we featured that not too long ago. You two subs will recall that in relation to Bitcoin. All right, so I'm going to close up some of that. Again, I see a journeyman technician's work here. All right, again, I know that's hard when it's not your chart, and I can kind of deduce what's happening here. But sometimes I'll start pulling things apart. So what the hell is he thinking here? Okay, so 1, 2. All right, so there's the 5. So this is shallow on the 2. Right? So this is an ugly start. And often, the 1 wave is often the ugliest wave because the market is fighting to change the trend, right? So after this waterfall, here comes oh man, this is because they're fighting the bears because the bears are, what are the bears looking for? That, right? That's what the bears are after, right? So the fact that they can't do it, right? Okay, so this is tricky in here. Definitely, that's an ugly start. But it ultimately comes down to, okay, if I've run out of all possible solutions here, okay, that works, right? So of course, the first thing he's making sure of is that we don't overlap. Can we hold an impulse here? Well, if that's the 4, yeah, you can. All right, so you can go 1, 2, 3. Looks like, oh Jesus, how are we doing this? You might have to do it up here. Well, boy, that is an ugly start there. Let's dig in there a little bit. 1, 2. You'd have to go A, B, C. All right, I see what you're thinking. Well, we're on the edge there. All right, let's go with it. So we get a nice finish on the. I don't think you can get it. Ooh, that is ugly. All right, so you see, guys, if you're not skilled in Elliott Wave, so he's looking for so we've got 3, 3, and then this is tight here, but digging out a 5 to get that here. So we get an expanded B wave via the 3 that's there, come down for the 4. He's working with what he's got there. There's not that's ugly, right? At this point here, if I'm over here, I'm not sure, right? That would not be a trade that I'd pursue, because that's so unusual. It's really not until you get this 5 that where you can start working backwards and say, okay, that might work, maybe, but still ugly. I'd still be a little uncomfortable here. But what I can see here is that after however this gets labeled, this is what I'm keying off of, right? There's my 3. Now it's shallow, and let's make sure we are on log scale. Yes, we are. Oh, come here. Oh, I do it like that. Okay, it's not uncommon to hit the 38, right? It's less common, but we see it all the time, particularly in crypto, right? So something's on the move. It's an impatient market, right? So they don't want to wait, right? So up it goes, and we go in 5. So it's not going to be, right? So here's where the little just deductive reasoning, right? It's not going to be the 3. So we've got a 5. So just process of elimination, it's likely to be, if this is going to hold as 1, 2, that's likely 1, 2. What do I get here? All right, it's just same thing, right? Always the same, right? Look at 5s and 3s. Where are the 5s? Where are the 3s, right? You can just work from that. Okay, got a gap here that the market's not going to like leaving that. Okay, 1, 2, 3, 4, 5. Okay, so 1, 2 looks like that might be a little deep. Nope, it's spot on, right? So, all right, so what do we get here? Golden corner pocket, right there. Okay, so as we emphasized yesterday, with the exception of selling options, which is the only place where you get better odds, that's the highest odds in trading, right? Of the underlying, technically, right? That we're going to get that median line, which we do easily, blows, right? Goes right through it. So the golden corner is realized. The algo target is realized. So you can look at this. So to see what we're doing here now, we're combining. Okay, so this was a very ugly start to this, but it starts to clarify. So sometimes the market it's a lot of head fakes until all of a sudden something will pop and you're like, oh shit, there's a clear 5 and there's a clear 3. And look at that, I'm at the golden zone. Okay, I may not be comfortable with the way this 1 is labeled, not necessarily his labeling or my labeling, anything. I'm not sure about that 1, but I'm real clear about that 1. And I'm real clear about that and where that happens. Golden zone. Right? That's an easy one. So why, just common sense. Why do we like the golden zone? Why do we like that trade so much? Right? I mean, if you want to be really risk averse, you can put your stop just a few ticks under the 65 because we do see them wick through, right? Again, as I talked about this yesterday, there've been probably, I don't even know at this point, half a dozen to a dozen people that now teach this, right? As I said, this used to be the best kept secret in trading, use the 65. But now it's, well out in the open. And so it's very possible that some of these algos have been recalibrated. They could be using the 66 or the 67 or the 707. We don't know. But here's a perfect example where you see it come. Note here, this is the important point. It's not the 618. You know what's happening there? I guarantee you somebody sold that there or got stopped out there because they read, oh man, I didn't know if it breaks the 618, it's probably going the other direction. So I'm going to put my stop just underneath the 618. That's why you see it all the time in the golden zone. So somebody got bent over there, stopped out, and then had to watch that go all the way off. Sorry. That's why you have to put the 65 on there, or you see, if you want to use 66, 67, at least the 707 as he has right here in red, something to give you an idea. Right. And I don't want to miss the golden zone if it comes because I sure as hell don't want to miss the golden corner, which was realized here, right? Not going to be the 3. So we get the algo target. Boom. All right. Not much of it. So it's baby, right? It's tiny. You can barely see it, but it's in there. Right? I got a tiny little 3, but there it is. Up we go. All right. So there's the 3 again. It's ugly, right? We're 4 hour. 1, 2, 3, 4, 5. It's tiny, but it's in there. 1, 2, 3, 4, 5. Let's go down. That'll work. All right. Get that up to that 3. Okay. Now, right, again, a little bit ugly. So, again, it's not perfect. Market's not going to give you perfect when you want it. Essentially a 3. I'm following a 5. So I'm looking for a 3. So even though I'm kind of going, oh shit, it's not that, which is what I'd prefer. For the most part, I can probably dig a 1, 2, 3, 4, 5 into an A, B, C into a B, 1, 2. Oh shit. It's a little, it just breaks down there, right? It's not great, right? So is it there? I'd be a little uncomfortable with that. So I'd have waited for this. Oh, come here. Because, and you'll often hear me say this, right? If you're not comfortable with it, it's like, oh shit, is that really done there? Wait for this, right? Let it confirm. I'll say, wait for the first little retrace, right? What do we get here? If you're willing to wait, right? It shows, right? Now you go 3, 4, 5. So there's, but it's a 50 too. It looks like it. Right in between the 50 and the 618. So if you're, excuse me, guys, if you're uncomfortable with that, okay, let me see if I get a reaction here. I'm at the 38. I'm at prior structure. There's the Vegas wave. I've got all sorts of ingredients. Maybe that's a 3. Oh, look at that reaction. Down, retrace, right in the pocket. There's the first target, second target, third target, fourth target. So this algo gets paid all the way up. 3, 4, 5 into a larger 3. All right, so I can complete something here. So if I pull way back out on that, I can see where we are. I know. It's really hard to see when I get all that on there. Let's get some of this off so you can see it. Oh God, let's get that off. I'm going to just clear it up. All right. Just so we can see in there. I don't want to take too much of his stuff off. All right. 1, 2, 3, 4, 5. So 1, 2, 3. Now note, we don't make the 1618 on this one. It's not going to make it all the time. What's the second most common? 127 to 138. It looks like that's 138. All right. So don't ignore it if it doesn't get to that target. So here's the 127, 138. He doesn't have it on there, but we go right in the pocket. Second most common location for the 3. All right. I've got the outer parallel here, right? So that looks like that's the 150. All right. So on the edge here, coming back in towards the median line. What do we do? Down to the other parallel. And now we're going, this is very common. You'll see it go equidistant one side. It will match it on the other side. Damn it. Hang on. Oh, so sorry, guys. I really suffer from allergies. I think I mentioned, I don't know if more people watching. I just ordered a boom mic like this that has a mute button on it. So I'll spare you that I have to deal with all the time. Okay, so here we got ABC, ABC. So it looks like WX. Now he's working on the Y. So he's got a target, like even with his arrow here. He's got a location. He's got a buy zone down here. Right, all framed out. Right, this is you can't do this with anything else but Elliott Wave. You can't draw. Certainly not as precisely. Right, so we can draw this line here and go, oh, potential support. Okay. Potential we can put support and resistance levels on it. I wouldn't discourage you from doing that, but you can't quite put it in the context of pattern, price, geometry, time. Look here. And additionally, so he's got the Elliott, the initial channeling that you would put on is very common target for the 4. So if the 1, 2, well, he's got both of it, right? So you would start when you only have the 1 and the 2, you run that channel. Once you get the 3, then you run either you run a second channel, or as he's doing it here, which I prefer and I suggest, is you do it with a set of median lines. Right, outer parallel. Now we're working, right? So we have that equidistant here. Now it looks like per his roadmap here, this is not done, because what are we doing? Even though it's complex, what are we doing? We're just looking for another 3. That's all we're ever doing. Where's the 3? Because here I can see a clear 5. In fact, I've got a 1, 2, and then I've got a completed impulse. So I know where I am. 1, 2, completed impulse. I know exactly where I am. 3, 4. Now that doesn't mean that this must be how this plays out, but it means the odds favor. That's all we get, guys. That's all we get. Pattern, price, geometry, and can I find confluence? So if this comes down here, because right now the premise is the X is in, so we need another A, B, C to finish it. Doesn't look like we got much more than a start on it here. Well, maybe. This could be 1, 2, could be A, B, C is already in. Now we might come up shy. Maybe we don't make it that far. Maybe we don't make golden zone. It's just getting started here. So I'm going to pull that off here. So, that's just, so let me get this right here. Let's get on this. So not quite. So could this be 1, 2, 3? Well, it couldn't do. Well, let's see. No, we would take that off. 1, 2, 3, 4 could possibly. We've got a diag that's going. Oh, pardon me, an impulse, because we wouldn't overlap. If that's, it's not much of a 1. Let's see if we go down to an hourly. Oh, he's highlighting a trouble spot. All right, what can we get? What can we make out of this? That's the X. This looks really. Boy, that's a tough dig to get. You probably that's a bit of a force fit here, a little bit. If you're trying to go 1, 2, what are you going to do? 3, 4, 5. Iffy. So it looks. It's even a 15. I don't even think we can get that at a 15. 1, 2. Barely. Looks more like a 3. So you might have your 3 here, followed by a 3 here. Now this could be, you could have 3, 5. So this could be this is clearly a 3. So we've got this 3 here. This is a tricky one, right? So we've got this 3 here, followed by that 3. So as he's noting here. Now, if this goes up and we get a 5 here, then we got to put that in the context of what's before it. All right. So something would be either the starting here. So perhaps, right, this would be unusual. Perhaps the ABC is going to complete down here, although it doesn't look like it's done. So this is going to throw a monkey in the wrench. If this is a 5 that comes off of here, you'd have to be anticipating another ABC, because it would be unlikely that would be done. Oh shit! Now I got to go out here. That we'd be done there. So right now, just sitting as it sits right here, right off the bat, I'm unclear as to what's happening. This is even going down to the 15-minute. I don't know what exactly is happening here. I don't have a clean 5 to say, oh, there's the A. I can't tell if it's a 1. It's incomplete. It's not, you're looking at a half-baked cake here. I don't know. I can't tell if that's the frosting or something else. So this would be watch list. I like everything until I get right here. Then I'm not sure. And if I'm not sure, right, when in doubt, stay out. There's no reason to go in when you're not sure. The only reason you'd go in is FOMO. Oh shit, I don't want to miss that short. But really, if you're teeing up for the short, right, the anticipation is here. He's trying to get the double here, to get the short into the long. For me, that's not good enough, right? I'm not sure. So I would wait. Okay. If you come down here, now I'm going to feel a lot better, and I'm going to be able to work backwards and kind of solve this. Right now, I don't know what's going on. So I'm on hold. I see we're in this consolidation. I can see this. but I'm not sure. So when in doubt, stay out, right? So I like it. Watch list, alert it. I'd probably put an alert on this pivot and alert on this pivot. When it breaks one or the other, now I'm interested again. And then I can kind of dig in here and say, okay, what ultimately happened there? So Narwhal 72, I think you're on the right track here, but until we get a little bit more reveal from the market, I think this is just watch list, right? Keep, again, pivot or alert here, alert here. When one of those breaks, then we can complete the count, or at least put the next leg in. All right, how are we doing on time?
We're good. We're about 125 in.
Okay.
We don't have any requests from non-members. We did have one donation from TW, and it was just in appreciation of the live stream. So $15. Thank you, T.
Thanks, man.
But one thing, I guess, since we got a little bit more time, and unless somebody requests something with the donation on there, then maybe take a look at DXY, because I know that's kind of just overarching it. It affects everything. And I've got it to where it could potentially be breaking out.
You mean the dollar index?
Yeah. I've got it where it could be potentially breaking out to the upside, which might cause some.
Well, this has been a really difficult count here. Let's because of this, right? What happened at COVID, right? So it kind of makes this difficult to deal with. Okay, we've done this with the members so many times, right? And now you've got this. It's very difficult here. All right, so but this is good, right? So I like to kind of do this. Typically, I'll do this for members. Just even though I might have counted this 57 times, I'll start with a blank chart, so we can kind of look at this and say, well, this is not too terribly difficult to spot, right? Probably, right? Spot that impulse there. All right, so. If I recall, these are all very technical too. So just right to re-emphasize, well, this one starts it here. Well, let's just finish it here. So it looks like that's your A, B. We'd have to go 2 here. There's the big 3 going for this is a slight front run, looks like it. All right, all of these kind of got tagged here for whatever reason. Market didn't want to go below that, and then look at the rip that comes off of that. 1, 2, 3, 4. Looks like an extension in the 5. This is just you almost don't need to label it, right? So the thing that characterizes particularly a 4 after this kind of a 2 is just we're going sideways. It doesn't advance the trend. We're going back and forth, right? It's typical 4-like behavior. So coming off of that, okay, so there the 5 completes. All right, I got 5 up right out here on the daily. What am I anticipating after that? Well, I'm looking for. It's just actually a good example, right? And I think we went here. I remember doing this, and we've gone here. Okay, so we've gone 1, 2. This is 3, 4, 5. So this completes the impulse. So actually, I'd come all the way back here. All right, so we're done with the impulse. So we're anticipating. We've got 5 that's completed. Now we're looking for 3. Well, right off the bat. Coming off of this, and again, this should be relatively easy for people to spot, right? It's hard to miss them, right? That 5 hard to miss. That 5 hard to miss. Well, excuse me. I'm so sorry, guys. I think this was also in here. I haven't looked at this in a while. Here, one of these was spot on it. Remember. Anyway, so we got 5 down. So I've got 5 up followed by 5 down, right? So if you're an Elliottician, the assumption is, well, I'm not done here. I'm not likely to be done because I've got 5 followed by 5. It doesn't compute, right? Per rules and guidelines. So what's the logical assumption you'd make here? A. Well, this is a little wonky, right? But at this point, you'd be thinking A, B, C. So I'd start. So when this, right, we have this unconventional pattern here. I'm going off memory here, so I'm going to just work through the process that I would do. Right. So now I'm starting to look for confluence points. I'm starting to look for geometry where, all right, what can I anticipate based on the tool set? Right. So because this is steep enough here, I'd look at it in both. Now corrections, you typically want to look at a shift for the ABC, but because this has gone so deep here for the potential B, original actually plays better here. So this could be ABC. Now I'm kind of in no man's land here, where you'll often hear me say random pivots are extremely rare. right? They're almost always technical. So if I look at this, it looks like that's another 5 down here. So let's see. You can't have, remember this, you can't, this easy one to keep you out of trouble. Can't have a triangle in 2, even though it looks like, do I have a triangle? Looks like you can get a 2 here and then you have to go 1, 2. Let's see here. So this looks impulsive. That looks like a 3. Well, this is also kind of same idea where we're not progressing the trend. Now, one of 2 things is happening down here. Either the market is wrestling with a trend change, but what looks more probable to me is that this is corrective. So this looks like you'd have to go, Jesus Christ, you have to do it. We can go from here. That's not much of a, it's going to have to be, so working backwards, you'd have to do it like this. So this would have to be somewhere in here, 3, because of this. Right. So what's my eye is drawn to right off the bat is that, right? So I'm looking for the force. Where are my retracements here? This looks like it's part of the internal impulse that creates that 3. So, here, let's take this up a degree. Let's go micro here. Okay. So that little 3 draws me in to the idea of that being a 4, 1, 2, you're going to have to dig that out of there. 3, because this is too big to be the 4 relative to this 1, 2. So it looks like something completes here. So put it in larger context. It looks like you might have to do it this way. 1, 2, 3. If this is going to hold 4, 5. Now let's go here. We'll put it in white. All right. So at first glance, while it's not perfect, looks like you'd have to do it this way. So, this one's going to have to be here. This one's going to have to be here. This one's here. 1, 2, 3, A, B, C into the 4, 1, 2. You do the best you can down there. So that would give me my 3 here. Now here, this would be noteworthy. Failure to make the median line. Right. So that's a little bit of just a warning shot. It's like a little bit of a red flag, right? It was on its way there. Now that's a mighty deep, right? Here's the COVID reaction. That's a mighty deep B, right? But as before, right? When you get that close, right? This is, I absolutely promise you this. When they get that close to a pivot, they are doing everything they can. In fact, I would imagine they widen the spreads to get stops there. When they get that close, they are doing everything they can to get there. The fact that it can't get there is what creates this rollover. So if that's going to hold as the B, which certainly it looks like a good candidate, even though this is a very unusual formation, right? So you get the COVID reaction there of fear, which leads people to the dollar. So down we come with the 3. This looks like AB going into the 4. So I would just kind of standard ops here. If that's going to hold as my 2 into the 3. Okay, well, here where I'm coming up to the 38, I'm going to take this one off. All right, so coming in here, double top here. Well, we certainly got some structure there to play with. So you might also just kind of looking at this here, I'd probably have to change that color. Put that in. Let's do yellow here. So I've got a little zone here, potentially some resistance. So one thing to look for in all FX, double tops, double bottoms. Right. Market just loves it. Right. That's literally how they rape retail every single day. Right. Double tops, double bottoms, or W's or M's, right, as they're often described. You want to be looking here. So if this starts to roll over, the anticipation is there's one more to finish that. Let's take that up to the appropriate degree to get that ABC to finish. So if there's one more push down, there's, what would we have? It doesn't look like it's done, right? So we'd have a 5, 3, 5. So you'd have a zigzag with a deep B, even though that's a very complicated way to get into that B, but you've got no other choice other than to go go A, B, C into the B, into the C. So you're kind of stuck with this, right? You've got to take what the market's going to give you here. And that's all we've got to work with. So, but this miss here makes me think there's potentially more to go. All right. So now just additional forecasting. Now I don't get much of a, come here. I don't get much of a 1, which is telling. All right. So there's the 1. If I don't have the 4, right? But if it were to double top here at this 38, I'm just looking for those logical locations, right? So most common is 100%. Well, right, coincidental. I don't know. Perhaps we come down here, we double bottom. Next one, it's just like you're looking at for the other swing relationships. This would be a very shallow, if you had an extension in the third or the one, you might look for the 618. Right, to be for a shorter fifth. Most common, there's the 100. Interestingly, already ticked it, right? But that's after the fact, and I don't have this, right? This could be here. I don't have it, so you can't put any weight into the fact that that's at the 100. But from there, again, I'm waiting to get that 4. Now, if this rolls over and it ends up, I've got some sort of an AB, and I'm going to that would be surprising. It looks like that's just come here, like that's just dying to go up there and finish that 5. 1, 2, 3, 4, 5. It's going to go up there and finish that. Always look left for any kind of pivot. Well, this is the obvious one, but I don't know if it's going that. Right? You never know, right? If it's going to go that high. You'd start to be, getting kind of see it's the length of time of the 4 relative to the 2, because you have to go 1, 2 so quickly. Impulse. So you don't want this to really take a lot more time, or you're going to be wrestling with the potential that you're just going to truncate the 5 down here. And this, because if this turns into an impulse and we start to, well, let me frame it out for you. If that impulse goes there, right, and then we get a 3, you're going to be hard pressed, because you're going to be at that. Well, is this the bottoms in here? And trading principle number 4 is going to be in play, right? This is a tricky one, because trading principle 4 would be extremely bullish, because we know trading principle 4, number 4 of Andrew's 4 dominant trading principles, failure to make the median line creates the swing potential for a move equal to or greater than the swing that failed to get there, which means you're going at least to that pivot. So this tricky one. Oh, we had that before the ABC. It didn't look like it was there. So I'd be anticipating one more up here. If it comes down to 3, that's decision point, because you don't know if does that go here or do we roll over, right? You're just going to have to take the risk based on your perspective on what's happening with the dollar. Until proven otherwise, I'd be anticipating the 5 down, because I don't want to. Well, let me rephrase it. Truncation is abnormal, right? You don't want to, you truncate only as a last resort. If we go 1, 2 here, okay. You don't want to assume the truncation. I want to assume that the 4 is not done yet. Right. But I don't want this to go too much further, because the time relationship starts to distort it. So if this is going to be A, B, and I'm finishing the 5 here in the C, I'd be anticipating the move down, because I know my odds still favor 80% that we get to the median line. So where are the better odds that it's going to fail and I'm going to truncate here and I'm going to have an unusual finish to this 5, or that the odds are going to hold and I'm ultimately going to get to that median line? Oh, they're about to print how many more $1 trillion? I can't imagine how that's going to be bullish for the dollar. What makes the dollar go higher, right? Fear, right? And some people will tell you that the dollar may ultimately be threatened by Bitcoin as the world's reserve currency. I don't know. They're going to print another couple of 2, 3, 4. How many trillions of dollars are they going to print here, sending the dollar up? I'd be more inclined to think that's sending the dollar down, but we shall see. What do I have here? Right here, if I were looking to be short here, I'd have pattern. I'd have some geometry. At least my geometry is giving me a target. 2 to the 3 at the 38, 23 to 38, most common location for the 4. I've got this sideways action. I'm not progressing the trend. I'd be looking for 1 down. And if it comes down in 3, well, a couple of things are going to happen. If this completes that 5, there will absolutely, positively be an algorithm that's going to start buying right there. Right? Remember, algorithms break on one side or the other. Ultimately, are we always going sideways? So you're going to anticipate that if for that pattern to complete, we're going to go down there. That's how I would view it until proven otherwise. Right? If I'm wrong, I'll take a jab. All right. We got anything else, MonteCrypto?
I don't
not
think so. I've got a couple of people requesting things, but that's not.
Yeah, I got it. Well, let me wrap up here. If we've got no more requests with donations attached to them, let me just wrap up by saying that what you've seen, for those of you that have participated today, yesterday, is very much the traditional TradeDevil's methodology that I live and breathe, that I teach and trade. But my partner, MonteCrypto, while he is a level one Elliottian and he knows Elliott Wave, he's got his own approach to trading using everything from support and resistance to long-term levels, and a very unique approach to geometry that as far as I know, there's nobody else teaching it. It's a totally support and resistance and geometry, and he is a great balance for members that come into our educational system, because there's an alternative for those that are not drawn to Elliott Wave. So you'll often hear me say Elliott Wave is third on our list of priorities. First, always, right? First, always the algorithms, right? What is our dominant algo done last? Then the geometry, then only if it's helpful. Often remind people that the Elliott Wave is optional. It's not mandatory for trade success. It's only if it's helping. And if you don't have a handle, or you're not drawn to it because it takes effort, it's not easy to, and if you want to progress, I promise you get through to get through a purple belt with it at TradeDevil's University, you are a skilled Elliottician if you get that far, right? And they're not easy to pass. So the idea being that not everybody is drawn to it, right? So we wanted to give people an alternative with how to approach the markets. And he's doing something that I've never seen, and I've seen just about everything. I've never seen anybody doing what he's doing, and it's very effective. He's got a really solid following amongst members that do one of two things. Either they've decided that Elliott Wave is not for them, and they're drawn to his approach, or they're doing a combination of the two. So I would encourage you guys, if you're interested, again, in developing your TA skills, either through what I'm teaching or what my partner is going to teach to you, I would encourage you to take a look at it and see a totally unique approach to support and resistance and geometry. And that I will tee that up for you for tomorrow, same time, same place, and you'll get a very different look. So you'll know that there's more than just what I'm teaching you through things I've learned. All right. Yeah. So tomorrow, 9:30, get ready for that. You'll see something that I'm quite sure you've not seen before.
All right. Thanks for being here.